Welcome to the night where we light up the spark. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, I shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the load.
Is this thing on? Hello? Good evening. Welcome to Markets After Dark, where we go mad on the charts. Crazy day today. Very, very poor economic data. Might have been saved by the bell, though. But for how long? We'll see. Anyways, guys, welcome to Markets After Dark, where we go mad on the chart Sunday through Thursday, 11 p.m. Eastern Standard Time, right here on the Piper Academy Network. I am Lunar Beaches Crypto, and I'm trying to get my life together. And by that, I mean, I think I need a new mic stand. Or boom, whatever. But also, the market is trying to get its life together. Because I don't know if you guys saw the morning market report right here on the Piper Academy Network at 10 a.m. this morning. Every morning, Monday through Friday. But if you watched that, then you probably already know what the data was. If you're engaged in these markets whatsoever, then you probably already know what the data was today. Wasn't good. It wasn't good. But even with what seems to be a contracting economy and a cooling labor market, we still had a flat PCE come in. So that kind of staves off fears of stagflation, at least a little bit. But the trend is still not our friend. Massive contraction, economic contraction, minus 0.3%. This is not good. Shipping, trucking, down dramatically to 2020 pandemic levels. I think we actually went lower now. Imports coming into the country. They say the freights are empty. They're saying shelves will be empty sometime in May, maybe June. But I don't know. The question is going to be, what is the Fed going to do? How does the Fed interpret this data? I am curious to see what the Atlanta Fed is now saying. So we'll do GDP now. Going to kind of wing it tonight because did not have adequate time to prepare for a show. So we're just going to kind of stream. We're going to talk some stuff out. We're going to look at the charts, of course, as we always do. But let's see. Latest estimate, April 30th. Oh, what? All right. Before I get into this, because this is... What? Okay. Hold on. Before we get into this, you know what we got to do? We got to bring up the madhouse. What is going on, all of you mad degenerates? How are you doing? Hope you're doing well. Good evening to you all. Let's go ahead and say good evening to the chat. Good evening, all set. How you doing? What's going on, Alexandra G? Thank you for being here and pinning that Discord link in the chat. Be sure to check out the Discord. It's only $5 friggin', okay? And tons of alpha. So, join the Piper Academy membership alumni today. I'm obviously an amazing marketer. Stupid Bitcoin. Thank you for being here, Stupid Bitcoin. I do appreciate you starting to become a regular. I love it. RMT Retro Mike Tech says 1 hour till we walk away, right? Right? Going off of the old adage, sell in May and walk away. Maybe not. Actually, when you look at historical trends, this quarter tends to average like 7% or something. So, or May tends to average. I think that's what it is. May tends to average like 7%. So it's kind of gonna be, could be a meh month. It could be a very explosive month, or it could be a very down month. It could be all three in one. That's why we take it day by day. But I'll tell you what I think after this monthly close, what I think we might be seeing for May. Melissa, what's going on? One Love, hope you're doing well. I did not forget you, Kasim. Thank you for being here. Good morning to you. I know you're on the other side of the world. Oh, I also did not forget you, Pigeon Town Smooth. Don't know how you came up with that name, but I appreciate it. Thank you all for being here. Damn it, LBC, I'm looking for a plausible excuse to walk away. Well, I say give it a couple of weeks, all right? But this is interesting. Because the last time I looked at this, we were sitting at like a negative 3.7 or something. That was just like 2 weeks ago, if that. Well, let me go ahead and read this. I know you guys can't read that, but the growth rate of real gross domestic product, gross domestic product, GDP, is a key indicator of economic activity, but the official estimate is released with a delay. Our GDP Now forecasting model provides a nowcast of the official estimate prior to its release by estimating GDP growth using a methodology similar to the one used by the U.S. Bureau of Economic Analysis. GDP Now is not an official forecast of the Atlanta Fed. Rather, it is best viewed as a running estimate of real GDP growth based on available economic data for the current measured quarter. There are no subjective adjustments made to GDP Now. The estimate is based solely on the mathematical results of the model. Recent forecasts for the GDP Now model are available here. More extensive numerical details, including underlying source data forecasts and model parameters, are available as a separate spreadsheet. You can also view an archive of recent commentaries from GDP Now estimates. Please note that we no longer support the GDP Now app. Download our Economy Now app to get the latest GDP Now nowcast and more economic data. Latest estimate, 2.4% as of April 30th, 2025. The initial GDP model estimate for real GDP growth seasonally adjusted annual rate in the second quarter of 2025 is 2.4% on April 30th. The initial estimate of first quarter real GDP growth released by the U.S. Bureau of Economic Analysis this morning was minus 0.3%, 2.4 percentage points above the final GDP now estimate of minus 2.7% growth and 1.2 percentage points above the final gold adjusted model nowcast. As explained here, the gold adjusted model replaces what was the standard model with the onset of today's forecast. The next GDP update is Thursday, May 1st, so that'll be tomorrow. So maybe this will look vastly different tomorrow, but it already took in this morning's data, and somehow it got pushed higher after today's data. What? Here's what I learned about sell in May. The last 2 years, the market can underperform due to a string of back-to-back holidays. Mom and Dad's days, the 4th of July, summer vacations, etc. Yeah, exactly. But BTC USD. We'll do the index. We'll go to the monthly. Now, I told you guys that I wanted to see a monthly close above that, above the March high. I also said it wasn't necessary for us to continue to be bullish, but it would have been nice to have that. But that means that it is for sure on May to get above that high. Really, now it's got a new high to get above and close above, not just get above it, but close above it. If May goes how I think it might go, I think it might do something like this and then close down here. And then we will run it down, and the whole economy, global economy will collapse, and everybody will go through a dust bowl depression created by the government on purpose so that they can take our brains and use them for energy because they want to travel to Mars to create a whole technocracy, and Peter Thiel will be the new king, and Elon Musk will build the rockets to get there, and Bill Gates will actually be there too, but only as a source of we'll just call it hazing. But outside of that, yeah, I think it'll be okay. Maybe we'll see. I don't know. What's going on, Crypto Princess? Thank you for being here. I know it's early for you, lady. So thank you for being here. I do appreciate you. Mimi? The people who want to go to Mars don't like the laws on Earth. That is the motivation. Yeah. Lunar, what's going on, French toaster? Hola, French toaster. Thank you for being here, my friend. I do appreciate you. All right, let's go ahead and take a look. Let's see. Last May, giant, pretty good green candle here. Let's see, from open to close, it was a nice, let's see, a nice 11.27%. Let's see, May of 2023. Oh, from open to close, 23%. Oh, sell in May, huh? All right, now here is May of 2021. Okay. Massive, but already kind of showing topping structure. May of 2022, obviously middle of a bear market. Also important to note, prior to May, April was red. Prior to May, April was red. May, green. 9.52%. May, geez Louise, 62%. Okay. May, oh, look at that. 69%. Okay, well, sell in May and walk away, huh? May, 18.78%. Okay, so I guess we just sell in May, right? Sell in May and walk away. Guys, we've come into this monthly fair value gap. We've gotten a close above the middle line of that fair value gap ever since we created the fair value gap, but ever since we started tapping into it, now we have bounced out of the fair value gap. This is a bullish signal. That doesn't guarantee anything. It is just a bullish signal. Okay. Also, no immediate rejection again off of this order block, this monthly order block. Let's go down to the weekly. Let's make it even better. Go down to the weekly. We have weekly order block still sitting above us. So that would be an area of, I won't call it an area of resistance. Why can't I supply? Thank you. Thank you. Line, please. Line, please. Yeah, an area of supply up there between probably 99 and a half to the all-time high at 109. I think we at least get up into that. Let's go ahead and take a look at the fib. All right, so we tapped the 618 golden pocket and closed below it. However, we closed above the 50% retracement for April. Closed back above 50% retracement. It's looking good. 3-day rule. Does anybody know the 3-day rule? Any of you familiar with the 3-day rule? So essentially the 3-day rule is when you have 3 consecutive days where you create higher highs and higher lows or lower highs and lower lows, that is an early signal to, well, let's just say if it's 3 straight days of lower lows and lower highs, that is an early signal that things are turning bearish. If it's 3 consecutive days of higher highs and higher lows, that's an early signal that things are going to be bullish. Particularly if they are big body candles. They have to have some kind of meat on the bone. They can't be indecisive candles. That's not what we like to see. Is that when we drop food on the floor? Wait. Similar to the 3-bar play. It's pretty much what it is. How's the 52-week moving average? I mean 50. All you people, I swear. I swear, that 52-week moving average, guess what? We're continuing to bounce away from it, baby. Woo! Yeah, we're continuing to bounce away from it. It held so far. So far, it has holden. It has been a holden. Okay? Or as the Brits say, it has been holding. Bullish, love it. So 3-day rule. So when you have, let me just draw it out. So if it'll let me, okay. I'm going to change this to basic white box. There we go. Can I get it? Yep. All right. So I'm just going to do this. Do this. It should be pretty quick. That's what he said. Oh no, no he didn't. Oh yes he did. Oh yes he did. Dun 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 dun. Okay, so there it is. All right, so this would be, so we're looking for this on the daily chart, and essentially what you are getting, so you have your high, okay, you got the yellow, got your high, and then you got your low. And then on the next candle, you got a lower high and a lower low. And then on the next candle, you got a lower high and a lower low. So 3 consecutive days of lower highs and lower lows. As far as like the even when accounting for the extremes of each side of the candle. Took me all that time to draw that out just to explain that little bit. But so going back to over here, first sign that we were heading towards the abyss, or at least correcting, we do get a 3-day move just like that right here. You got your high, your low, your lower high, your lower low, your lower high, and your lower low. Now, remember what I said about I prefer bigger bodies? Well, we get that over here. Lower high, lower low, lower high, lower low, lower high, lower low. All right, so that signal has now flashed twice. 1, 2, 3, 1, 2, 3, 2 times. In the middle of a consolidation range where we are at highs, all-time highs. Okay, context is also key. Now, looking at this, we can see lower high, lower low, or higher low, higher high, higher low, higher high, higher low, higher high, and we do get a big push up, but that immediately rejects, and we immediately get the lower high and the lower low and the lower high and the lower low and the lower high, lower low. Ugh. And then 3 straight up candles. So we're getting a little bit of confusion, but if we're counting, we've got bearish moves. We've got 3-day rule. You get a nice little push above the highs, sweep the highs, and now context is what matters. Because once you get a sweep of the highs and you fail to close above the highs, and then you get the 3-down rule, well, look what happens after that. So, middle of consolidation, don't really care. Moral of the story. After a swing failure, a failure to break above and close above a swing high or a swing low, 3-day rule, massive downside. Now, coming from the bottom, sweep the low. We look for a 3-day rule. Do we get it? Higher low, higher high, higher low, higher high, higher low, higher high. And there it is. I don't particularly like this candle, and I don't particularly like this candle. However, we can see pretty much holding the lows in here. but kind of doing a little bit of a rounding off. So we really want to see some continuation coming in here pretty soon. I would, the sooner the better, because that would mean that the move is strong. It's a strong move, strong like bull. Strong move. This is move that is strong like bull. Okay. Now, I said on Sunday that I would expect for this week to be a consolidation week. And that is because of the weekly chart based off of smart money concepts. Why? Because if I am to be bullish, if we are to be bullish, like I think we are, then I need the close above this high. Got it last week. And then I need a consolidation candle. And even if it breaks up and comes back down, I need a consolidation candle to what? To create a weekly fair value gap. So once this week is over, and if we create that weekly fair value gap, then I would expect for the following week, next week, to dip its toes into that fair value gap. And then that is when I will drop down to the 15-minute time frame or lower and look for a sweep of internal liquidity. We can sweep the gap, no harm there. And we do have this imbalance all the way over here. Now this is on the 15-minute, so we might not get that. However, come down in here, get a shift in market structure, and then I will be going long AF if all of that plays out how I want it to. And then we'll just see how it goes. So yeah, free falling now, free falling now, free falling now, free falling now. I'm in a long since Asian Open. Like this one. Nice. So today my trade was. I'll go ahead and show you guys. Spaceman. Where's my spaceman? There you are. All right, so down here we had the yearly open and the previous quarter midpoint, which also happens to be now is our previous day low also, essentially. This was the This was the previous day low. So, New York opens. I waited for the data to settle. I wasn't able to catch the short, but I did because I had an alert set for the equal highs up here, and I had an alert set for the equal lows. Equal lows or just this low? Wait. No, it was the Asia low. We broke the Asia low. It looked like it was reaching for lower than that. So I held off and I waited. Then once we came down, we tapped or swept the previous daily low. That's what I had it on, the previous daily low. That's what I had the alert on. It was this low right here because it was the previous daily low. So once we swept that, I waited to get a shift in market structure. I guess I didn't really which I need my actual perp chart. Perpetrator chart. Yep, there we go. So we get up here, we close above this internal little bitty high here. This is on the 1 minute. We create a fair value gap. I go ahead and I say long it from the fair value gap. And I aim for the highs. Now, I made a mistake today, really breaking one of my rules, which is really frustrating because I should have never even broke it, because I didn't have a reason to. I was just, I've gotten better with sticking to my plan while I'm at work and just letting trades play out. But sometimes, I get a little too hasty. So what happened was I saw it run up to here. Didn't take profit. Maybe my first mistake, but that wasn't what I was aiming for. Then I saw it come down to here. I was like, all right, cool. Come up, come down. Then I saw it shift and break above this high here. And I was like, all right, sweet. I'm going to go ahead and move my stop loss up here. And that way, hey, I make profit if I do get taken out. And of course, what happens? I get taken out. If I wasn't going to get taken out here, I was going to get taken out here. But if I had just left my original trade alone, where I got in at the fair value gap and aimed for these highs, eventually I would have gotten there. Cool. Cool. But that's okay. We still had a positive day, and that is what matters most. So a little baby trade compared to what I could have made, but still a positive trade no matter what. Not if you didn't move your stop. Slap those hands. Yeah. Yeah, so the rule that I have for moving my stop, that is the rule that I broke today. Because instead of waiting for this high like I should have to break, like it did over here, instead of waiting for that high to break, that is when I would have and should have moved my stop to this low here. If I would have just done that and waited for the break, I would have been fine and I would have gotten out in profit. So just remember that. I don't trail my stop until a swing level is broken and take a piece out at every swing level that is broken. So we enter, so let's say we enter our trade here. And we got our stop loss down here. I'm not taking profit here. I haven't broken my high yet up here. So at this point, I'm just riding the trade out and I'm just watching and I'm waiting. You know, we get this consolidation. Let's go ahead and set an alert here. Go ahead and just keep the stop where it is and just wait. Price comes up, breaks the high. Now I move my stop to this low and I'd stay in the trade. And then it does come back down, but eventually it does get up to my target. So patience and sticking to your rules are both key in trading. So that was my mistake. Learn from my mistakes. Now, you could have taken the full target here, or you can just continue every swing high. Just continue to move that stop higher and higher, as long as you have a swing high that is taken out. Now, if you get something like this that looks like a clear shift in market structure, maybe it's time to get out. Plus, if you've been in since, I don't know, 10 in the morning, you should probably be out by 10 at night, unless it is a long-term play. Now, what I really don't like is how this is looking right here, because to me, you know those trailing stops I was showing you guys? Well, I'm not the only person that does that. Where is price likely to go? Where the buyers are. It's actually sell side liquidity, but another topic for another day. So how is sell side liquidity at the bottom? I'll explain it at another time. But so yeah, come down, sweep the lows, and then maybe, hopefully, finally, we can come up and take these freaking equal highs. Okay, swing back down low, come back up and take the equal highs. Please? Here they are. Please? Thank you. Army Piper, what's going on, my guy? He did not read up and see my comment. Monthly MVP looks like another rally is building. Yes, Pie Bear, maybe Pie Bull soon. Well, welcome to the party, Piper. That's interesting though. Let's go ahead and take a gander at exactly what Mr. Pie Bear is talking about there. Hey Piper, before we get into that, look what's holding up. What is this? What is this yellow line here? What is this? I'm confused. What is this? Man, it's crazy. Super crazy. All right. Anyways. Monthly index. Bing bang 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 bang. Boom 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 boom. Boom boom boom. Wait, I already have the prime oscillator, don't I? Yeah. Okay. Do 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 do. MV Pizzle. So where are you seeing? What'd you say? Monthly MVP looks like another rally is building. Yes. How do you figure? Based off of which chart? Coinbase? Nope. Calbicom? Nope. Binance? Double nope. Bybit? Nope. Binance Perp? Nope. Mexi? Nope. Index? Nope. It didn't cross purple. Yeah. The thing that I pointed out to you. I remember that. Any of them. It is restarting the wave again in blue. Yeah. So we're talking about this light shade of blue. Restarting the wave again, potentially. Potentiality. We shall see. Get that dark heavy blue and we get rolling, right? It closed tonight, dude. Yeah, I know, dude. It's literally in the title, dude. No, I pointed this out when we were going over the MVP oscillator. I want to say it was a month or so ago, maybe in March. I'm pretty sure it was in March. And I was like, the difference, because you were talking about how something, I can't remember the exact conversation, but I was looking at it and I said, okay, but these called the tops. If these were the tops, well, then the MVP oscillator hasn't crossed above the purple line, which would mean I mean, every single time before, that meant it was the top. But if we haven't done that yet, then have we really topped? And then new movie, dude. Where's my Bitcoin? Somewhere in a North Korean hacker group's cold wallet. Dude, where's my oscillator? Dude, where's my carbonator? Carbonator? Carburetor. Jeez Louise, you guys kill me. Dude, where's my catalytic converter? An east, a west side, a south side Memphis story. Dude, where's my catalytic converter? Carbonator? Yeah, I don't know, Bandage. Shout out to you, Bandage. Thanks for pointing that out. Shout out to you, Harp. Good evening to you and the Dusty Hunt and Mr. NJC. Thank you all for being here. I do appreciate you. I'm going to create a new cold wallet and call it The Gambler. Here we go. Starting up this conversation again, huh? Why are you such a gambler? All right. Total 2 altcoins, including Ethereum, below the 52-week SMA. Not good. Okay. However, as one Alex O Crypto would say, we are posturing to the upside. Very posh. Posturing to the upside. Or they're Canadian, so they might say posturing. I don't know. I don't know how they speak up there. I think it's English. It's hard to tell sometimes. Power bar seems to be weakening a little bit. Could be getting a flash on that trend fusion. And, you know, typically that means we're getting pretty hot. So we'll see. The 50 what? The 52 SMA. But we're trying to get a break above that downwards trending resistance on our total 2. So if we can get a break above that and the 52-week SMA, that would be absolutely ballin'. Now our total 3, everything excluding Bitcoin and Ethereum, looking much better. We're above our 52-week SMA. We closed above it now 3 weeks in a row. Very positive. So now we just need some continuation going on in here. Okay, that'd be good. Stop trying to distract me, Piper. Others did get a breakout of the downwards wedge, getting a push towards that 52-week SMA, still sitting below it. And so others is all the altcoins outside of the top 10. So what is the difference between total 3 and others? It's probably XRP. It's probably the one that's holding everything up in the altcoin market. Not even lying, not even kidding. It's bounced the hardest and it has been the most stable. And like most strength outside of Bitcoin. USDT dominance. 3 straight weeks of downside, holding up at that 52-week SMA. But if this thing falls, like I was showing you guys last night, this was November. We just got to see if we can cross that 5% threshold. We can cross that 5% threshold as when we tend to get the big moves in the market. And we're on the edge. We are on the brink. On the brink. Tesla was down 3.38% today. It had been running pretty goodly. It's so easy. Focus, OBC. Focus. Trying. 52-week SMA holding up. Got to close above it on a weekly chart for Tesla. Oh, it was Wednesday. How did these earnings come in today? I believe it was Microsoft and Meta. Let's see. Earnings hit. It looks like good earnings as we were expecting. Surprise, 1.62 billion in revenue. Estimate was 68.44 billion with a reported 70.07. So 2.37% surprise on revenue, and on earnings a 7.38% surprise. So positive earnings for Microsoft, but we were expecting that. Meta, same deal. Surprise, 2.36% on the revenue, 22.83% on the earnings. Incredible, as we thought. Because it's not the big guys that are hurting, just so you know. It's the little guys. Earnings tomorrow, we have Amazon and Apple. Yes. Apple earnings tomorrow or today, later today, Thursday. Aftermarket on Tesla is down over 4% on FUD. The Elon may be swapped out. Yeah, I saw that. It's just market manipulation, bro. Get used to it. This is the world we live in now. Well, it's the world we've lived in for quite some time. To be frank, to be completely honest. But yeah. I'm almost at my 90-day goal, 10K to 2 million demo trading BTC using 25x and 0.02 fees. Paper trading is like going to the gym. Yeah, it can be. As long as you continue to operate the exact same way, and as long as you are actually following rules and following proper risk to reward, then you should be able to translate that into the real thing. But nothing changes a perspective in trading like putting up real dollars. So just keep that in mind. Don't lose sight of the fact that 70 to 80% of trading is psychology. Discipline is really what it all breaks down to. So, and that is just about sticking to your mother effing rules. All right. So I believe you can do that. It's worse than market manipulation. It's Elon manipulation. I believe in live fire. Get out of the range and get in the fight. There you go. Yeah. Let's take a look at the 2-year, 3.62, and the 10, 4.17. Quick math says that is above 50, 55. 2 and 10-year spread. Brother, I clicked on you 10 seconds ago. Please. 0.56. All right, so that does signal recession. If we had a negative GDP, which it looks like we did for the first quarter, then if we come out in the second quarter with a negative GDP, what does that mean? A recession as well, as long as we get labor to really start to cool off, if not collapse, which means unemployment rate rising, less jobs for people, less jobs being created. And today's economic data gave us a really big signal that that labor market might be cooling. So it's not really might be. It is. The labor market is cooling. It looks like, well, I should say, I don't know. It's a mixed bag. It's kind of weird to me. I'll have to have Piper explain that tomorrow. Yes, please. Thank you. NDXT, so the top 100 and NASDAQ, still holding within the megaphone pattern. I do like patterns on stocks because they do tend to play out more often than they do in crypto. But come down into the demand zone, get a bounce, got to get above that 52-week. What? Yeah, 50 what? Depends on who writes the rules. Yeah, that's true. ES with another positive day and gapping up to start this day. So we're seeing some positivity coming out of the S&P 500 and the NASDAQ. We are starting off the day in our futures 1.06% for the S&P and 1.51% for the NASDAQ, both approaching the daunted, the incredible, the magnificent, the radical. I don't know how it's all of those things at once, especially the daunting part. But the 52-week SMA and the Dow Jones as well. These are such obvious reversal patterns. But these highs are the ones that we must breaketh. We must breaketh these highs. For the NASDAQ, that's about 20,500 points. For the Dow, going to be 43,141 points. For the S&P, it's going to be 58,860 points. Got to get above those levels. Now, important to note, we have come up, we have come down, we have created a higher high internally within this range. No, we have not created a macro high, a new macro high. However, internally, we are seeing higher highs and potentially higher lows getting put in. And it's not something to ignore. Let's pull from high to low. We have broken above the 50% retracement. We're coming up to the 52-week and the golden pocket right at the exact same time. Let's get a close, a weekly close above that 52-week SMA. But the real kicker is going to be getting a close above this high over here. We can do that. We might be a little more, at least short-term bullish, okay? Like maybe 3 to 6 weeks of bullish price action. We'll see. The Fed will be coming in hot. I want to say May 14th. Let's see. Recovery or bear market rallies? The big question that is answered by those level breaks. Yes, exactly. May 7th. Really? It's next week? Oh, that's right. ADP. So we got the FOMC next week. I'm pretty sure that that we will remain paused. Pretty positive on that. And I'm pretty sure that's what the market is. The CME Group Fed Watch tool is saying as well. Yeah, 97.0%. 97% to remain paused. And after today, so one day, That's a jump of 7% in one day. So from the 29th to the 30th, jump of 7. Well, we'll say 6. This is 90.8, 6.2%. Just based off of today's data, Fed is going to stay paused. Let's go into June. Let's see. Before the 1 day for a rate cut, that went up 4.5% about. To stay paused, went down about a little more than 0.5%, but that is a 25-point rate cut. We went up on that. We also went down. Yep, we went down on a 50-point rate cut from 5.7% all the way down to 1.9%. So it looks like we're consolidating towards a 25-point rate cut in June. Then July, this looks like we're not going to be holding. We're definitely going to be cutting in July. June and July, September. Wow, we're actually pricing in more rate cuts. 350 to 375. 3 straight FOMCs of rate cuts. 325 to 350. 40.8%. That jumped up. Market's starting to price in more rate cuts, it looks like. Probably because of that PCE, but we know how these things go. We get some of the worst data imaginable and everything just turns around. I always thought Middle Eastern cokes were kind of flat. I like Saudi Coke and Dubai Coke also out of the bottle. They are now calling for 4 this year on Wall Street. And there we go. There you go. So, but we could tell just by looking at the Fed watch tool that it looks like that's what looks like it has shifted today after today's data. And I don't think it's because of the contracting economy, although it could be. But I mean, well, it's actually probably both. It's probably both the fact that we have a contracting economy and that the PCE came in flat. Even though year over year, Piper can correct me if I'm wrong, year over year, the PCE is probably still up. But it came in lower than expected and actually much lower than expected. So, yeah, I don't know. I was stationed there for a year. R.S. Miller, you military or a vet? If you are, thank you for your service, sir. But yeah. So, up, down, left, right, sideways. I think I'm still leaning bullish. I mean, I don't know what you want me to tell you. I'm still leaning bullish. I see macro sweeps of macro lows, and when you go down to the next time frames, lower time frames, putting in higher highs and higher lows. So, I don't know. Anyways, we will have to see what tariff pricing does in the months ahead. Yeah, it's not the next few weeks that I'm concerned about, because I am concerned. It's like 2 to 3 months from now, June, July, August. I don't know. I just got this feeling it's going to be brutal. I think we'll get our last little, it might even just be a relief rally, and that might be all she wrote. Or we might even get all-time highs, but that even might be just a relief rally. And I think for most altcoins and for most small cap stocks, that is probably the truth, is that they just get relief rallies. They don't set new all-time highs. The entire market, other than Bitcoin and your indices and maybe some of your bigger tech stocks, maybe they put in big gains and maybe some of them break all-time highs. But outside of that, I don't know, bro. I don't know. Unless we get some rotation from the big stuff into the smaller stuff from the but typically you're not going to get that rotation in a risk-off environment. It has to be a risk-on environment to get that rotation, typically. So, but when we saw today, it's not always sell in May. In fact, it's typically only sell in May when in a bear market. And I don't think we have proven yet that we are, in fact, in a bear market. We've been in a bearish trend, but a bear market, well, only time will tell. Speaking of time, it's my time to go. And I do spot on LBC. Ah, thank you. I got it right. Yeah, I do appreciate each and every single one of you for being here. Thank you for all of your kindness and support and showing up in the chat and showing out and hitting that like button. Don't forget to join the Discord. That link is pinned in the chat right here. Thank you, Alexandra G, for always coming in here and pinning that in the chat for us. And for being a boss mod queen. And yeah. So I don't know. I'm thinking maybe some continuation, but I kind of still want to wait for this week to kind of get past us, really kind of get past the FOMC next week before making like any swing trade decisions. But if things present themselves, we can take a chance. Ada hit bottom. We'll see. Great show. Thank you, Pigeon Town. I appreciate you. Cheers, stupid Bitcoin. But anyways, don't forget to come over. Join us tomorrow for Good Morning Crypto with BC Port Corp. After that, we'll have the morning market report with the Army Piper and the OC guy. Then we'll have trading with the OC later in the evening. Those times are 6, 10, 8 Eastern time. And I'll be right back here at 11 for more Markets After Dark, where we go mad on the charts. I hope you all have an amazing, beautiful, wonderful, radical sleep. And I will catch you all on the flip side. Peace out, mad love, and a good night. Bye.
Welcome to the night where we light up the spark. We're trading crypto, find out you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, I shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's Markets After Dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets After Dark, where only brilliant shows. Hit that subscribe and join the ride in the world. directions collide. Lunar's path will be your guide through the market storm or the market tide. On the charts with Lunar's bright light, crypto markets soaring through the night. From big dome markets soaring fast, markets after dawn to shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trend, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be shown. Let Lunar Beaches guide you to the Lord.